David Wickenberg. He's a CPA and partner at KWB in Edmonton. David is one of the original founding partners, and he's been there for a long time, helping business owners to do advanced tax planning over decades. And we're going to chat today about some different tax specializations that are available in today's tax planning market that have been around for a long time, but not a lot of business owners use. So why don't we jump into it? And David, I'll say welcome.
Thanks, Bruce. Good to see you.
Yeah, I see you. David, we've been working together for, well over a decade, coming up, as time flies by, almost 2 decades now. And over that time, we've seen a lot of changes in the landscape of, investments and tax planning and insurance and financial planning and all these different things that business owners, deal with aside from their business and working, on the business instead of just in the business. And they've helped grow those businesses over years. And as accountants, you've seen a lot of different business owners have success to varying degrees, whether they're making, tens of thousands, hundreds of thousands, or millions or tens of millions in any one given year over time. And I think, being a CPA, there's a lot of planning that's kind of come and gone. And what we want to focus in on is what's available today for business owners. So with that in mind, what's your view on the landscape?
Yeah, no, absolutely. And you're absolutely right. Like up until about 8 or 9 years ago, we were focused primarily on the short term, the current year, the next year, because there were some great planning tools. You could income splitting was still really good. Lots of other tools that existed. There wasn't as much of a focus on the saving in the long term with the tax planning.
Yeah.
Now, over the last decade, the government and the CRA has closed a lot of those planning opportunities. And so there's still great opportunities in that the corporate tax rate's usually pretty low, under 500,000 if you're a small business, 23% for if you're over 500,000, 11% if you're under 500,000, typically. So we end up with a lot of income, a lot of earnings that are trapped inside the company. And taxes ongoing are usually still pretty low. We do a really good job of that. What we're finding is that there's more of an issue with when people are retiring, looking to sell their business, that sort of thing. They don't really understand how much tax might be payable over their next number of years.
Right. And just to kind of you know, build on that and add to what you said, it's not the annual taxes that we're taking out, which you could do through dividend sprinkling with family members that the Tosi rules took away, or some pipeline, trap corporate assets that you could pull out through capital gains. Those things are kind of done. We're now saying, okay, well, you've been a business owner for however long, and you had a plan to get to here, and you've got a plan going forward. But how can we improve on that plan? Because despite having an accountant or investment person, or a lawyer and an insurance or financial planner at your financial institution, a lot of them are providing these services on an integrated basis. What's being missed is some of the pieces to that puzzle, or how to put the whole puzzle together. Would you agree?
Yeah, and I think it was just the way that it ended up happening because we were focused more on short term, and I think lots of accountants probably were, and lots of other professionals in complementary businesses were as well. But we're now starting to say, you know what, we need to also focus on the long term. We need
Yeah.
to be focusing on beyond 5 years, beyond 10, beyond even 15 years. Because if we don't, then those will creep up on us. And when we get there, there'll be a lot more tax to pay than if we had done something now.
Yeah, but can I put off tomorrow's problems until tomorrow, David?
Sure, they just get bigger.
And I think also what many business owners don't realize is that number one, the rules can change. So if you put this stuff in place today, then you might be grandfathered and you get to use like a pre-82 rule or a pre, 2015 rule if you had that stuff in place before. But if you wait 3, 5 years, next year, it could all be gone with through legislation, right? It could be gone in February.
Yeah, no,
And
that's a good point for sure.
yeah. And then there's other things, everybody's heard about insurance being utilized for some of these strategies. And obviously, that's not the only strategy for reducing taxes, but you might have decent health today and in 6 months or in 3 years not have decent health. And then you might want to do it and you're ready for it. You understand it, it makes sense, it fits, but you get declined. And so tough luck, right?
Right.
Yeah. And even for those people that, aren't quote insurable or healthy today, or they're working on something, or, something's come up and they just can never get coverage. There's other ways to use a spouse or other family members to implement some strategies that actually pull money out of the company tax free, right?
Right. Well, and I don't know if we're going to be talking about this a little bit later or not, but just that reminds me, I mean, we've had some instances where some clients were higher rating than we had expected,
Hmm.
still insurable, but not as favorable as we would have thought. That actually has some good planning opportunities to it, right? So that which was new for me and eye-opening for me in
Yeah.
that that actually can be beneficial. So just because you might be at a higher risk, a higher rating on anything, doesn't mean that we can't move forward and even have better results.
Yeah, it really is about pulling money out of the company tax free, right? And there's different ways to do that. You can do a freeze and use lifetime enhanced capital gains election for the value of the business itself, but and maybe move some of the retained earnings into that calculation, but not a lot. And it if you have capital gains, real estate values have gone up, you're going to pull 50% out tax free, but the other part that's there is going to get taxed at 50%. So there's always a quarter or some chunk that's left in. And how do we get that out without paying, 37 or 50 or higher tax rates? How can we get that down to, 18 or 20% or 0%? And
Right.
that comes through planning. And would you say, David, because we've dealt with so many clients, even in the last year, there's been lots of different, clients that are, doctor professionals or business owners at this age or that age, and they've got, stuff that's on the go. They're trying to pull stuff out. They've sold it. They're growing it. Lots of different scenarios. Would you say that, one size fits all?
Absolutely not. We've had gone different directions with probably every single client, and even had some clients that decided not to go in any direction, and that was something that you had pointed out. Then we talked about it with them, and they agreed, and it was like, okay, yeah, we've looked at this, and this doesn't move forward. And then there's others that, like I say, we've looked at, and it's like, oh, thought we wouldn't be able to move forward because they weren't as weren't as insurable, and it's like, no, 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 there's still this option and that option. And
Yeah.
so no, every single case so far has been different. There's been the odd similarity, but
Yeah.
every single situation has been different because it ties into the individual, it ties into the company, it ties into the family, it ties into, and there's just way too many variables for them ever to be the same.
Yeah, I agree. Yeah. How much have they taken out already? How much they need to take out? There's, pre-selling your business, the time of selling your business, there's post-retirement and estate. Those are four stages that are very distinct. And there are so many variables in there, as you put it, that, yeah, it's not one size fits all. So, let's sit down and talk about it because I think in every one of those cases, every one of those business owners that we talked to had all their professionals and had their plan already done. Would you agree?
Yeah, nearly.
Yeah.
A lot of them, right?
Whether it was a good plan or a bad plan, or three-quarters complete or 100% complete, it was old, it was new. I
Yeah.
think in every single situation, we were able to add value. And
Well, and you know what? That's a really good point too, in that even if they work with us and design a plan, we're going to be touching base with them every 2 or 3 years on that plan, right? Maybe we will more frequently just because we work with them, throughout the year. But I know you will be coming in every so often to like touch base and okay, what's changed?
Mhm.
Here's what we were assuming was going to happen over the next 15 years. Is that on track? Has it changed? What's going on? Does the plan need to be tweaked?
Yeah, you want to pull some money out, or you've sold this, or you've done that, or you're thinking of something else. And yeah, so how do we help you problem solve, right?
Right, right,
Yeah.
exactly.
Okay. So we're improving client situations. No, every situation's different. What do you think about the ideas that we've been sharing and going over with clients? Would you say that they're, conservative and sleep at night, or aggressive and, you gotta have your checkbook ready to fight the CRA or pay for a tax lawyer to defend you?
Well, I don't work with too many clients that want to have that happen.
Yeah.
That are
Many.
craving that fight with CRA. Most would love to just avoid it. No, I mean our planning with you and your team, is tends to be a bit more on the conservative side. There's planning that we'll do that might be considered moderate, but whenever we and you as well, I know, see anything that we know is offside, we're very honest and upfront about that and say, no, this is offside. We aren't going to be doing this.
Yeah. Yeah. And
But
even gray is like, the more grays you get up here, the less grays you want in your fine. It's just like
yeah, no,
you know
exactly.
better.
And
Yeah.
the good thing is that we'll at least talk about that, right? And say, okay, well, we think this is fine, but just be aware, here's the risk area, right? And here's what and most of my clients, like you just touched on, aren't interested in taking
No.
on much risk at all.
Yeah.
And so we avoid almost all of that.
Yeah, I don't think we need to, and we're not looking for, well, we don't need to, and I think the clients we work with don't need to. So, why go there? If something's, more aggressive, it's usually the client that, heard from a friend or was talking to some guy that, is over on the spectrum of, some scheme that sounds too good to be true. And, we can poke holes in it pretty quick. And it's, in 30 years of doing this, we've never had clients have issues with CRAs, and we don't intend to try because it's just not worth it.
Right. No, for sure.
Yeah, good. And so our strategies are conservative, they're compliant with CRA. Um, you know, why isn't everybody doing this? Or how do we know that the clients haven't already done all this advanced planning and they've done a plan with their advisor? How can we improve on that? What would you say to somebody that thinks they have it all?
Well, that's possible that they might have been working with somebody that's, that understands this area. That's rare. It is an area that pretty high level knowledge and expertise and experience required to understand and play in this area. And even if they have, as I mentioned earlier, the fact that it might have been a few years, things change, rulings change, tax laws change, personal circumstances change. Maybe they've got more money now than they did before, more trapped income than they did before. Health has changed, retirement dates change. Others, lots and lots and lots of things change. So it's always good to take a peek at this because what was hot or exciting 3 or 4 years ago, there might be something new. There might be something changed. There might be something different. So for the little bit of investment of time, and energy into this process, it's well worth it to just see, what options there might be or what opportunities there might be.
Yeah, I agree. I think in, a meeting, two or three, we can figure out, if one, it's a fit for both sides, and two, what the problems are and what the solutions are, right? I mean, we just whiteboard it, and I think, generally 1 or 2 hours, we can identify what those problems and solutions are, because we've done this so many times. And, come across situations too, like you've referred some clients that, we're dealing with advisors and maybe things were done wrong or too much is, one way was implemented because that was the only licensing that that person has. So, if you have only an insurance license and the only way that you make money is to sell insurance, well, guess what? You're going to sell all kinds of insurance to somebody that, in with a sober set of eyes and second opinion might look like it's too much and it's overdone and you don't need it, right? And we've told
Right.
people, some of these ideas and strategies aren't applicable, but these other ideas and strategies are applicable, right? So,
Yeah.
yeah, yeah. So, David, people are busy and they don't really have time for this, or it's taken care of, or it's good enough. And we hear all kinds of excuses as to why people procrastinate on this. What would you say to somebody that's kind of on the fence of, I've got it done, but I'm not sure it's all done right, and is maybe thinking about getting a second opinion?
Well, I think that it doesn't require all that much of an investment in time and energy to get that. And it's the working in versus working on the business that we are big proponents of as well is that 1 hour to improve your business 1% instead of working 1 hour on that next job that you're doing or the sale that you're making or whatever is going to have such a huge impact at the end of the day. And this is the same kind of thing. A few hours, and it's only an hour or two at front. And then if there are opportunities, well, then it's like, okay, here's the opportunities. Here's what could, and yes, that's going to save you tens of thousands, and that's going to save you hundreds of thousands. And, I think couple of the ones that we've done, it looks like it's going to be over $1 million additional funds that are going to be there for them because of this planning, right? We're working, with one person, and I know that they've moved up their possible retirement date by about 5 years.
Yeah.
Now, they may not choose to enact that retirement date. They might want to keep on working for whatever other reason. That's why we look at this plan again and again, every few years. But the way it sits right now, they can retire 5 years earlier. So, they may do that. That's huge, right?
Yeah. You spend, 5 or 10 hours up front and you save, hundreds of thousands or millions because it is over time. Like
Yeah.
you're saving the taxes, annually and at retirement and at the end. And all of that is, time well spent. It's your highest, best use of your time, per dollar.
Well, and that example, it isn't just the financial. The financial has led to that we've bought that person 5 years of
Time.
traveling or 5 years of, being with grandkids or 5 years of, whatever,
Balanced life, a more
helping
balanced.
out a charity. Like, I mean, there's
Yeah.
just so many opportunities or options that's created for that person
Yeah.
that is far, far, far more valuable even than the $1 million extra. That million just created the time, that's all.
Correct. And I think that's what I love about, what we do together and, getting up and more. Don't need to make a sale, don't need to make more money, don't need to have somebody do something. But when you sit down and you ask them questions and you get them thinking about things they haven't thought about before, and you identify problems that they don't even know they have, and then show some solutions and the pros and cons, and you come up with this nice, clear picture puzzle plan for them, the value that that adds is beyond money. Yeah.
Yeah. Yeah.
That's the rewarding part, I think, for both of us.
Yeah.
Yeah.
Yeah, and it's not even you mentioned you said the word problems, but it's not even problems, it's the opportunities, right? There doesn't have, and that's I guess another thing that if you're talking to somebody or I'm talking to somebody, it's like we don't have to there doesn't have to be a problem. There doesn't have to be an issue. But what are the opportunities? This is a far easier way to make and save, the money, the assets that you're building
Yeah.
than work. You could put an entire year's worth of labor into the business to generate a couple $100,000, and a few hours in this area could save twice that.
Yeah. No, I agree with you. And, it's beyond the investment, it's beyond the insurance, it's beyond sort of the tax code. There's other things that, like, I had a file this morning that I've been working on for, a year or whatever, and we've added tons of value, like millions. And yet this morning we're on, with the tax lawyer and estate lawyer going through some other strategies, and it'll save them so much time. Like and from, here in BC as well, from, things being challenged through a will. So setting up trusts and family trusts, there's so much to this planning and putting all the pieces together. Like your tax lawyer might be good at one thing, accountant's good at another thing, and family law person or will, their estate lawyer is good at, but putting all the pieces together so they all fit and work together,
Mhm.
that's the fun and the magic, honestly.
Oh, for sure. And that's one of the huge advantages is the collaboration that we've done, right? When we
Yeah.
get together, we both have good ideas on certain things, and then, we collaborate and we look at that, and like you say, we even bring in others sometimes, and you end up with like the end product, the end plan that's better than anything either of the two of us could have put together and,
Yeah.
added into that. So it's just the being able to collaborate with professionals that know this space and know what they're doing
Yeah.
is huge for sure.
Yeah, no, I think you hit the nail on the head. It's, the team collaborating and creating these synergistic ideas together. It's
Yeah.
perfect.
Yeah.
Yeah.
Well, and usually, not all, not, I shouldn't say all the time, that also takes a whole lot of the effort and work away from the business owner.
Mhm.
You and I run with it, right?
Yeah.
We whereas, if they try to cut corners or they try to deal with just the one person they're dealing with, they're running around. They're talking to the planner, and then they have to talk to their banker, and then they have to talk to their accountant, and then they have to talk to their lawyer, and then they have to talk to a separate lawyer. And, they're running around to 5 or 6 different places versus basically they come to us and we're a one-stop shop that, we start the collaboration and then we bring in the tools and resources that we need, right?
Yeah, you're so right. And I'm glad you brought that up because how many times have we seen the typical business owner that's made all these strategies to, buy the business or start the business, to expand the business, to, hire, fire, merge or whatever, land, product, and they're used to making all the decisions. And they talk to the accountant, they get, this information input, and they make the decision. They talk to, this person on the financial and they make and they're always used to being the CEO that,
Yeah.
makes all the decisions. And to move from that president CEO role to the owner role and kind of putting a quarterback, in place or a good GM for the team in place and let us run, the team on the field. Hockey is always a good analogy. The owner owns it, but they shouldn't be doing the coaching or the GM side of things to get the players into practice and putting the plays together. That's something that they should hire out if they're really smart. I've said this in seminars, like often the biggest, challenge or problem that people have is they get in their own way. And so the
Right.
opportunity, to use your word, the opportunity is to, just sit down with us and engage us, and they'll know pretty quick if we can help them or not.
Right.
Yeah, good. Any final comments or thoughts that you want to share with our viewers, David?
Yeah, I think just how much fun I guess it is working together. Your team at Infinity and us at KWB, and that the it's a good flow. It's a good, we work together well, and I think clients benefit from that and see that. So
Yeah, I think you're right. And I think it's also worth pointing out that, this advanced tax planning, box isn't the only thing that we do. Like you guys have so much on the advisory and accounting and other services that you provide to help that business owner that they should really sit down and just say, what's available from KWB? What do you guys offer that is of interest to me that could benefit me? And all that collaboration that you do with other professionals that are experts in other areas would be good for them to find out. And, for us in our niche, it's just doing this really advanced tax planning with you guys.
no, for sure.
Okay, great. Well, David, thanks for your time today and wish you a great day.
Yeah, you're very welcome. It's a pleasure.